Bitcoin would be higher than it, started the year, but not all-time highs for the year, which I think is healthy. Basically, you wouldn't want to see Bitcoin keep making lower lows after it already fell so much. That'd be not a great sign. On the other hand, I didn't really have much optimism it was just going to, blow out. If we look back at the end of the year, if Bitcoin has dipped into like, the upper 30s, or if it's already six figures, neither of those scenarios would surprise me because it's such a volatile asset and there's so much marginal difference that can happen. As long as liquidity is decent, Bitcoin historically tends to be pretty decent. It's divorced from the performance of the economy, and so I think that's kind of what we're seeing now.
Macro maestro Lyn Alden confidently asserts that the enduring Bitcoin bull market remains robust, fueled by the unwavering resolve of long-term holders who steadfastly cling to their positions amidst Bitcoin's year-long surge. Despite the SEC's approval of 11 Bitcoin ETFs, Bitcoin's price has experienced limited movement since the announcement. Following the SEC's decision, Bitcoin's price reached $46,118 per coin on Friday, showing a marginal 0.4% decline. Although it briefly surpassed $49,000, levels not seen since December 2021, the immediate market reaction has been subdued. Expressing optimism about the potential impact of ETFs, Lyn Alden notes ongoing debates about whether the market response will be a sell-the-news event. Bitcoin stands on the brink of its fourth halving in the current year, a significant occurrence guided by its monetary policy to augment its scarcity. Throughout history, Bitcoin has experienced an average surge of 128% in the year, coinciding with a halving event. Lyn Alden acknowledges the importance of the halving in setting up higher highs and higher lows, but asserts the timing of Bitcoin's movements. Looking ahead, she acknowledges the possibility of a liquidity problem in 2024 or a stagnation in liquidity, which could impact Bitcoin's performance. Now, shifting our attention to the video, Lyn Alden opts not to make specific predictions for 2024. However, she demonstrates assurance in presenting a comprehensive two-year perspective encompassing 2024 and 2025. Before we get started, subscribe to the channel and click the bell icon for the latest updates.
I don't see any signs that Bitcoin is not going to continue to be correlated with liquidity. So I think one of the biggest challenges, everyone's kind of focused on the halving and things like that. Of course, that all matters. So the ETFs matter, the halving matters. The halving doesn't necessarily matter in the several months around the halving. Bitcoin's ongoing hardening is really important. But if you look at prior bull runs, there's a lot of variability around the halving. And I would say in large part that's because it's actually liquidity that affected the timing more than just the halving. The halving helps set up higher highs and higher lows because it's how much Bitcoin's coming to the market that has to be absorbed, especially in a bear market, really matters. But the actual timing, 3 months, 6 months, 12 months, is in my opinion far more liquidity driven. So um, I think the ETFs are going to be helpful. People are debating whether or not they're a sell the news event. Like, a lot of people priced in the ETFs, and is the first quarter underwhelming? It's certainly possible. That money doesn't just pour in as quickly as people think. One thing I would take the under on is people keep saying, well, what if, these tens of trillions of dollars of pools of capital have a 5% allocation, for example, or a 3% allocation, and it's like that's not going to happen anytime soon, most likely. One kind of description I've given is that it's been known for a while that if you have a gold slice in your otherwise 60-40 stock bond portfolio, it improves your risk adjusted returns because there are periods of time where both stocks and bonds don't do well, but gold does well. So, for example, the 2000s decade or the 1970s decade, there are decades where just that slice helps a lot, and yet it's still underallocated compared to what you'd expect from looking at those numbers. Now, Bitcoin is like a rocket fuel version. I mean, if you look at that, Nakamoto portfolio or other types of resources that show what is adding a small slice of Bitcoin to your portfolio do, and it's like astounding for risk adjusted returns. So it should, you'd think it would catch on quicker, but some traditional pools of capital just take a long time to make investment decisions. Generally, when someone, a small business where the owner just has majority stake, they can make very swift decisions. There's some publicly traded companies that are still a lot of the decisions still held by the founder. For example, MicroStrategy, they're able to
Mm,
make quicker, more decisive type of decisions because they have that capability. Whereas, you know, firms that have a lot more spread out decision making, um, it can be a very long time to actually meaningfully adjust a portfolio strategy. So I do think that the ETFs are going to be helpful, maybe less so than people expect right away, but I'm hopeful. I think the other thing that could potentially derail it is a liquidity problem in 2024 or a stagnation in liquidity. It doesn't have to be a liquidity crisis, but it could be that you have just another stagnant liquidity situation. So you have like 6 months of choppy liquidity, choppy Bitcoin, and it kind of lets out some of that consensus steam, and then maybe you run in 2025, right?
mm,
So I'm not trying to predict any of those scenarios. Like literally, if we look back at the end of the year, if Bitcoin has dipped into like the upper 30s, or if it's already six figures, neither of those scenarios would surprise me because it's such a volatile asset and there's so much marginal difference that can happen. But that's why instead I've been far more comfortable making 2 year outlooks, which is that I really don't know what's going to happen in 2024, but at least I feel like I have a higher conviction of what's going to happen with the combination of 2024, 2025. So you absolutely could have a case where all these people are super bulled up for 2024, and maybe what they expect to happen doesn't, it gets all shifted back 6 to 12 months, for example.
mm.
I think there's a lot of scenarios like that. So far, we've not really seen any sign of distribution. So, when Bitcoin goes through, kind of major bull runs, normally some of those older holders start to sell into that market strength. Maybe they want to rebalance, maybe they want to consume, now they can finally afford the house they wanted that they couldn't afford before. And so you see some of that distribution as new buyers come in. And
Yeah.
that process hasn't even started yet.
In discussing challenges, Lyn Alden identifies privacy concerns as a significant hurdle. On Thursday, the first day the newly approved financial products were allowed to be traded, there was more than $4.6 billion worth of trading volume in spot Bitcoin ETFs on U.S. exchanges. While there are currently 10 spot Bitcoin ETFs on the market, Grayscale's GBTC accounted for more than half of Thursday's trading volume for these financial products. Simultaneously, Luno, the largest cryptocurrency exchange in South Africa, reports a growing trend among Nigerians to utilize cryptocurrencies to preserve and transfer value, thereby gaining entry to international markets. As per Lyn Alden, the struggle for privacy might emerge as a central theme in the upcoming decade, significantly influencing how Bitcoin is perceived and adopted. Now, let us focus on a video to explore more.
The Grayscale Bitcoin Trust already has like 500,000 Bitcoin. And so some of the concentration of custody risks that could happen from ETFs, I would say, have largely already been in place to some extent. Now, the majority of Bitcoin are not held like that. They're more distributed, which is a good thing. But there are some of these big pools that could be kind of either price issues or confiscation issues at some point, and that's not something that's gonna form. That's something that's already there. They're already kind of these big pools that are technically capturable. Um, Another thing I would say is that there's a degree of inevitability to it, which is to say that any large and liquid asset is likely to get an ETF for it, and is likely to get banks wanting to hold it either for themselves or for their customers. So to the extent that Bitcoin was successful, it was always going to face this at one point. It's not like something that can't not be faced. So the question is Bitcoin itself designed in such a way that it's ready for it? I think it is, but that's still another test it has to go through. It had to get through like the block size war. It had to get through some early bugs in the network. It had to get through. There are some countries that banned it and then like flip flopped on the ban.
Hmm.
And there's challenges along the way, and I think this is another challenge that's going to materialize. Um, so institutional liquidity has both a pro and a con. One is the con is the obvious one, which is you don't really want a lot of Bitcoin in ETFs or in highly regulated silos that are capturable. That's the downside. The upside is that more liquidity and more kind of automatic rebalancing of large pools of capital can help reduce the volatility to some extent, which then can make it a better money for people that are using it non-custodially, especially
Mm,
in developing
right.
countries, because the if you ask people why don't you use Bitcoin, the number one is usually volatility. They don't understand it and it's volatile. And so, to the extent that it becomes larger and more liquid and more kind of widely held, that can actually then encourage more of those small self-custodial type of buyers to enter. So I think that's number one. Um, you know, the other one, I think the biggest challenge is kind of that privacy aspect,
Yeah.
where in order, the government doesn't mind if you have Bitcoin as long as it's in a silo. The second one is okay, you can custody it, but they want to know you custody it and how much.
Yeah.
And then the third one is they really don't want private Bitcoin self-custodially to move around because that threatens their income tax model, that threatens their control over kind of sanctions, that kind of goes against the core of the current system. So they really don't want that. And I think that's kind of the bigger fight that's going to be had this decade is basically that price might be doing well, but that it's not really kind of changing things as much as you'd think because it's held back by some of those frictions. Um, the good news there is that so far it's been very hard to enforce that, right? So, for example, Nigeria cut off Bitcoin from its banking system, and they remained having one of the highest adoption rates in the world, and specifically, according to Chainalysis, had the highest peer-to-peer trading volume in the world because that's how they got around the bank blockage. And then we just saw in recent weeks, Nigeria's central bank is like reversing their decision to some extent. They're basically realizing that their blanket ban is not working, and that instead they want to try to bring it back in and regulate it a little bit, which is basically a way of saying we kind of messed up. We also saw India flip flop on this. We might be seeing the process of Argentina, because they had done the similar thing where they didn't make it illegal to own, but they said, okay, banks can't get into involved in the space as much as they want. Even fintech companies that are not banks still can't get into it. So they did this kind of series of restrictions to try to slow the outflow from the peso.
Mm-hmm.
Um, but that's obviously probably going to be somewhat different under the current administration.
According to Luno, South Africa's biggest crypto exchange, 2024 is lining up to be another big year for cryptocurrency. Despite the influx of substantial capital into these new spot Bitcoin ETFs, with CoinShares reporting $1.18 billion in inflows into digital asset ETFs globally last week, the expected positive impact on Bitcoin's price has yet to materialize. This raises questions about the underlying mechanics of these ETFs and their influence on Bitcoin's value. This concludes our discussion for today. Feel free to share your thoughts in the comment section below. If you found this content informative, please give it a thumbs up and subscribe for the latest updates. Thank you for being here with us.